Imagine you have a lemonade stand. Business is going great, but you want to open 10 more stands across the city. The problem, you don't have enough money to do it alone. So, what do? You ask your friends and family to chip in. In return, you give them a small piece of your lemonade business. That right there, that's basically what the stock market is. And today, we're going to break it down so simply that even a 10-year-old would understand it. Let's go. Quick note before we dive in, everything I share on this channel is purely educational. I'm not a financial advisor, and this is not financial advice. I'm just breaking down concepts in the simplest way possible, based on my own 10+ years of investing experience. Always do your own research before putting any money anywhere. Now, let's get into it. First, let's talk about companies. A company is basically a business. It could be small, like a lemonade stand, or massive, like Apple or Amazon. Every company needs money to grow, money to hire workers, build factories, create products, and expand. When a company's small, the owner uses their own money or borrows from a bank. But what happens when they need a lot of money, more than any bank would give them? That's where the stock market comes in. So here's what smart companies figured out. Instead of borrowing money from one place, why not sell tiny pieces of the company to thousands of people? These tiny pieces are called stocks, or sometimes called shares. Think of it like a pizza. If the company is a whole pizza, a stock is one slice. If there are 100 slices and you own one, you own 1% of that company. When you buy a stock, you become a part owner of that company. A very tiny part owner, but an owner nonetheless. So if you own Apple stock, you literally own a tiny piece of Apple. Isn't that wild? A 10-year-old with $20 could technically own part of one of the biggest companies in the world? Now you understand stocks, but where do people actually buy and sell these stocks? That's where the stock market comes in. The stock market is basically a giant marketplace. Just like how you go to a farmer's market to buy fruits and vegetables, people go to the stock market to buy and sell pieces of companies. But instead of a physical market you walk into, the stock market is mostly digital today. Millions of people buying and selling stocks every single day through their phones and computers. The two most famous stock markets in the world are the New York Stock Exchange, called the NYSE, and the NASDAQ. Both are in the United States, but people from all over the world can buy and sell on them. Think of it this way. If companies are the products and stocks are the tickets to own those products, the stock market is the shopping mall where all the buying and selling happens. Here's a question. Why do stock prices go up and down every day? Great question. It all comes down to something called supply and demand. Imagine there are only 10 slices of a really popular pizza, and 20 people want a slice. What happens? The price goes up because everyone is fighting to get one. Now imagine there are 20 slices, but only 5 people want one. What happens? The price drops because there's more pizza than people who want it. Stocks work exactly the same way. If lots of people want to buy Apple stock because Apple just launched an amazing new product, the price goes up. If lots of people want to sell Apple stock because Apple had a bad year, the price goes down. Every single day, millions of people are deciding whether to buy or sell stocks. All those decisions together create the price you see on your screen. Now the big question, how do you actually make money from stocks? There are two main ways. Way number one, the price goes up. Let's say you buy one stock for $10. A year later, that stock is worth $20. You sell it and make $10 profit. Simple as that. Way number two, dividends. Some companies share their profits directly with their stockholders, so every 3 months or every year, they send you a little payment just for owning their stock. It's like getting a thank you gift for being an owner. Now here's the most important thing about making money in the stock market. It's not a get-rich-quick scheme. The people who win in the stock market are almost always the ones who are patient. They buy good stocks, hold them for years, sometimes decades, and let their money grow slowly over time. I've seen this work firsthand over my 10 years of investing. Now, I have to be real with you. The stock market is not guaranteed. Prices can go down just as easily as they go up. Companies can fail, markets can crash. This is called risk, and it's the most important thing to understand before putting any money into stocks. The golden rule? Never invest money you cannot afford to lose. Only invest what you're okay with losing in the worst-case scenario.
The good news is, over long periods of time, the stock market has historically gone up. Not every year, not every month, but over decades, it trends upward. That's why patience is the most powerful tool any investor has. All right, let's wrap it up. Here's everything we covered today in 30 seconds. Companies need money to grow, so they sell tiny pieces of themselves called stocks. The place where people buy and sell those stocks is called the stock market. Prices move up and down based on supply and demand, basically how many people want to buy versus sell. You make money when the price goes up or when companies pay you dividends. And the most important lesson of all, patience and only investing money you can afford to lose. That's it. That's the stock market explained so simply a 10-year-old would understand it. If this video helped you understand investing better, please hit that subscribe button and the notification bell. Every week on the Investing Whiteboard, I break down investing concepts this simply, using real experience from over a decade in the markets. Drop a comment below and tell me, did you understand the stock market before watching this video? I'd love to know. See you in the next one.